Welcome to Wealth Hustle 247 podcast, your trusted guide to financial literacy, business innovation, and entrepreneurial success. Learn how to grow your wealth, make informed decisions, and turn your ideas into profitable ventures.
Want to keep more of what you earn? In this episode, we break down knowing and mastering tax-efficient strategies, smart moves to help you build and protect your wealth. Stay tuned.
All right, so are you ready to dive into this? We're talking about making that money work smarter, not harder, especially when it comes to taxes.
Taxes, gotta love them, right?
Well, maybe not love, but definitely got to understand them.
Exactly. And, you all sent in this source, knowing and mastering tax-efficient strategies. And let me tell you, it is packed with advice.
No, yeah, it's awesome. So many ways to build wealth and, not let those taxes just like eat away at it all.
That's the key, right?
Right.
It's not just about making money, it's about keeping it too.
Exactly. So I am super excited to dig into this one.
Yeah, this is going to be good. What I really like about this source is it's not just about like cutting your tax bill this year,
Right.
It's about building that sustainable wealth, over the long term. It's using tax strategies to your advantage, like every step of the way.
I love that. I love where this is going. But before we get into like all the specific strategies, I think, we got to kind of acknowledge the elephant in the room here.
Oh, yeah.
Taxes.
The old elephant.
Do you fall complicated?
Oh, they can be. They can be.
Is there any way to make sense of, this whole tax landscape without, getting a PhD in accounting?
Totally. I mean, absolutely. Every individual situation is different, but there are some fundamental principles, some basics that can help anyone become more tax efficient.
Okay, I like that.
Think of it like a toolbox, right?
Love a good analogy.
With different compartments for different aspects of your financial life.
All right. So what's in the first compartment of this tax toolbox?
The first one, and it's maybe the most important, is understanding the impact of taxes on your wealth.
Yeah.
Because it's not just about the income you earn, right?
Right.
It's about how taxes affect your investments, your business, if you have one, even your estate planning, all that stuff down the line.
Yeah, it's like taxes are this like invisible force that's kind of always there, right?
Always lurking.
And it can either be working for you or against you, depending on how well you understand it.
That's a great way to put it. And that's what we're going to try to do today, right? Make them work for us.
Yeah. Yes. I'm ready to be on the winning side of that equation. All right, so tell me, how do we do this? How do we make these taxes work for us?
Well, lucky for us, this source, it lays out some key principles for just that. And one of the first ones is this idea of tax deferral.
Okay.
Have you ever heard of that?
I've heard of it, but honestly, I get a little confused about like what it actually means.
Think of it like planting a seed that grows over time, all right?
Okay, I like that visual.
So imagine you have a retirement account, something like a 401k or an IRA.
Yeah.
You contribute what are called pre-tax dollars, meaning you're not taxed on that money right away. You don't pay taxes on it until you withdraw it in retirement.
Okay.
The key here, the magic, is that while that money is sitting in that account, it grows and it compounds year after year without being taxed.
Ah, so the seed is the money I put in.
Yes.
And the growth is the compounding returns that happen while it's like sheltered from taxes.
You got it.
Okay, I'm starting to see the power of this.
It's powerful stuff, right? And speaking of powerful, let's move on to another really cool tool, and that's tax-free investments.
Wait, hold on. Tax-free, like that actually exists. Tell me more.
It does.
Okay.
And a prime example of that is something called a Roth IRA.
Mm-hmm.
Now, with a Roth, you're contributing after-tax dollars. So that might sound a little less appealing initially,
Okay.
but here's the beauty of it. All those qualified withdrawals in retirement, they're completely tax-free. You don't pay any taxes on them when you take that money out.
Okay, so even though I don't get the deduction up front like I do with a traditional IRA, all that growth and then the withdrawals later, that's all tax-free.
That's exactly right.
So if I think I'll be in a higher tax bracket in retirement, a Roth IRA could actually be a better choice than a traditional IRA where I get that deduction now, but I'm going to have to pay taxes later.
You're thinking like a tax strategist already.
Oh, I like the sound of that.
This is exactly the kind of strategic thinking that this source encourages.
Yeah, I'm already feeling smarter just talking about this.
Oh, good. So are you ready to keep going?
Oh yeah, I want to hear about all the tools in this tax efficiency toolbox. What else we got?
Well, the next compartment, it holds two very powerful weapons in the fight against those high taxes, and that's tax deductions and tax credits.
Okay, so tax deductions, I think I have at least a vague idea of what those are, but tax credits, I need a refresher.
Let's start with those deductions.
Yeah.
They work by basically reducing your taxable income.
Right.
which in the end just lowers the amount of income that the government can tax.
Okay, so if I claim more deductions, I'm essentially like shrinking that pie that the government can take a slice of.
Perfect analogy.
Hey, Trey.
Think of common deductions like the mortgage interest that you pay on your home or charitable donations, even certain business expenses. Understanding what you're eligible for can make a huge difference.
Okay. Deductions were taking a bite out of that taxable income pie. What about tax credits? Those sounded pretty good.
Tax credits are even more powerful because they directly reduce the amount of tax you owe, dollar for dollar. Imagine it like getting a discount on your tax bill.
Now that's what I'm talking about.
Right.
So tell me, what are some examples of these amazing tax credits?
Well, there's a lot of them, but some of the big ones are things like the Earned Income Tax Credit. Now, that helps low to moderate income workers.
Yeah.
There's a child tax credit, and, they even have credits for things like investing in renewable energy.
Oh, wow.
These credits, they can significantly lower your tax bill. Sometimes you can even end up with a refund.
So it's not just about saving for retirement or buying a house.
Okay.
It's about, making choices that kind of align with these tax-efficient strategies in like all aspects of life.
That's exactly right. It's about thinking big picture.
I love it.
Now, speaking of choices, let's unpack another one, another powerful tool. Have you ever heard of income splitting and tax bracket optimization?
Ooh, that sounds complicated.
It can be, but the concept itself is pretty straightforward.
Okay, all right, hit me with it. How does this whole income splitting thing work?
Well, the idea is to strategically spread your income. You can do it amongst family members or even across different tax years to lower your overall tax liability.
Okay.
Imagine you've got a family, right? One high income earner, one maybe lower income earner. By shifting some of that income to the lower earner, they could potentially be in a lower tax bracket and therefore reduce their overall tax burden.
Okay, so it's like we're playing a strategic game with our income to kind of minimize the total taxes we pay.
You got it.
Okay. This sounds like something that probably needs a professional, right? Like, I don't know if I can just figure that out on my own.
It's always smart to consult with a tax professional, especially when you're getting into some of these more complex strategies.
Yeah, it's probably worth it, right?
Absolutely. They can help you navigate all the intricacies, make sure you're doing it correctly, and they can ensure that you're making the most tax-efficient choices.
For your specific situation.
Yes, exactly.
Okay, so we've got, the tax deferral, tax-free investments, deductions, credits, income splitting.
Lots of tools.
My toolbox is getting full here. I'm feeling more empowered already. So what's next? Where do we go from here?
Now that we've got the foundation, the basics, let's see how we can actually apply these strategies to different parts of your financial life. So are you ready to open the next compartment in that toolbox and see what's in there?
Absolutely. Let's get specific. All right, so we've got our toolbox, right? Packed with all these awesome tax-efficient tools.
We're ready to build something.
Let's see how to use them in real life, though, right? Like, what kind of tax-smart moves can someone with just like a regular job, a 9 to 5, make?
Well, if you're earning a steady paycheck, it's all about maximizing those tax-advantaged opportunities you get.
Okay.
And one of the best places to start is your retirement contributions.
You mean like the 401ks, the IRAs?
Yeah.
Isn't that kind of basic, though? Like, don't most people already know to do that?
You'd be surprised how many people leave free money on the table. Oh, yeah. If your employer offers a matching contribution to your 401k that's basically free money, a guaranteed return on your investment just for saving for retirement.
Oh, that's a good point. It's like a bonus just for being responsible.
Exactly.
All right. Besides maxing out those retirement contributions, what else can we do to kind of optimize our employment income tax-wise?
Well, but another really smart move is to look into a health savings account or HSA.
Oh, yeah, HSA.
If you're eligible for one, it's a triple tax advantage.
Okay.
Your contributions are tax deductible, the money grows tax deferred, and then when you take the money out for qualified medical expenses, that's tax-free too.
Wait a minute. So I can pay for my doctor's appointments with pre-tax money?
You got it.
That's amazing.
Yeah.
I need to look into these HSAs. All right, so that's for the employed folks out there.
Mm-hmm.
What about if you're, venturing out on your own, you're an entrepreneur, you own a business, what's in the tax toolbox for those people?
That's where things get really interesting. The source goes deep on this and talks about incorporating, choosing the right legal structure for your business, whether it's an LLC, an S Corp, or a C Corp. That can have a huge impact on your tax liability.
So it's not just about protecting yourself legally, it's a tax strategy too.
Exactly.
Okay. Can you give me some real world examples of how the different structures, how they might benefit different types of businesses?
Sure. So let's say you're a freelancer or a consultant.
Right.
You're running a small, low-risk business.
Okay.
An LLC might be a good fit because it's simple. The taxes pass through to you personally.
Right.
But let's say you're running a bigger, more established business. Maybe you're making higher profits.
Okay.
Then an S Corp might be more advantageous because it allows you to potentially reduce your self-employment taxes.
Ah.
And then finally, C Corp, they're a bit more complex, but they offer a lot of benefits for companies that are looking to raise capital or maybe even go public someday
Right. Okay.
because they've got their own separate tax structure from the owners.
So choosing the right
It's
structure,
a big decision.
it's not a one-size-fits-all situation.
Nope, not at all.
Okay. What other tax tips does this source have for our entrepreneur listeners out there?
Well, don't forget about deducting all of your eligible business expenses.
Yes, write-offs.
That's right, write-offs. Everything from office rent, your equipment, marketing costs, travel, even professional development, all that can be deducted to reduce your taxable income.
It's like turning your everyday business costs into tax savings.
Exactly. And the source really emphasizes this. You need to track everything meticulously.
Okay. Documentation is key.
It really is.
All right. Now, this source also mentioned depreciation benefits. Can you remind me how that works?
Sure. So depreciation basically lets you deduct the cost of certain assets over time to reflect the fact that they wear out as you use them.
Oh, okay.
So imagine you buy a delivery van for your business, right?
Sure.
Instead of deducting the whole cost of that van in the year you buy it, you spread that deduction out over the van's useful life, let's say 5 years.
Okay, so you're taking like a little bit of a tax break each year for that asset. Smart. What else should business owners be thinking about when it comes to taxes?
Well, this is an interesting one, hiring family members.
Oh, okay.
It could potentially offer some tax benefits, but this is definitely an area where you want to tread carefully and get some professional advice.
Okay. Yeah, makes sense.
But done correctly, it can be a way to reduce your family's overall tax burden.
It's a reminder that, good tax planning often involves looking at that bigger picture,
Absolutely.
not just individual transactions.
Big picture is key.
Okay, let's shift gears a little bit now and talk about investments.
Okay, investments.
Taxes play a huge role in how our investments grow, but it can be a bit of a maze,
Yeah.
What should we be focusing on here?
Well, one of the biggest takeaways from this source is understanding the difference between short-term and long-term capital gains taxes.
Okay.
So the longer you hold on to an investment, the better the tax treatment you're likely to receive.
So it's not just about picking the right investments, it's about having that long-term strategy, that
Yeah.
patience.
That's a big part of it. And speaking of strategy, have you ever heard of tax loss harvesting?
Tax loss harvesting. I feel like I've heard that term, but I don't really know what it means.
It sounds kind of counterintuitive, but it can be really effective.
Okay, so tell me, what is tax loss harvesting?
Well, it's a technique where you intentionally sell investments that are down in value
Oh,
to offset any capital gains that you might have realized during the year.
okay.
So let's say you have a stock that's just plummeted, right?
Ugh, yeah, I've been there.
You're sitting on what's called a paper loss.
Yeah.
By selling that stock, you can actually claim a capital loss.
Okay.
And that can offset any capital gains you might have made from selling other investments, the ones that did well.
So you're strategically taking a loss to kind of lower your overall tax bill.
Exactly. Now, of course, you never want to sell investments just for a tax benefit.
Right.
But if you're holding something that's underperforming, maybe you were already thinking about selling it, tax loss harvesting can be a really smart move.
Tax loss harvesting. I'm adding that to my list of things to research. What other investment tips does this source offer?
Well, it really highlights the importance of tax-advantaged accounts, like those Roth IRAs we talked about before.
Oh,
But there's more.
okay.
Ever heard of 529 college savings plans?
Vaguely. I don't really know what they are or how they work.
Well, they're specifically designed to help you save for education expenses,
Okay.
whether it's for your kids, grandkids, even yourself.
Got it.
You make contributions with after-tax dollars, but the earnings grow tax-free, and then any withdrawals you make for those qualified education expenses, they're tax-free too.
So it's like a supercharged savings account specifically for education.
You could say that.
I like it. I like it a lot.
Now, for folks out there that are interested in real estate, the source points out some great tax benefits there.
Oh, yeah. Real estate and taxes, that's a whole other world.
You can take advantage of depreciation deductions on any rental properties that you own. You can deduct the mortgage interest. And you can even use something called a 1031 exchange to defer capital gains taxes when you sell one investment property and then buy another.
A 1031 exchange, that sounds complicated.
It can be, But essentially, it allows you to just roll over the profits from that sale into the purchase of a new property and just defer those capital gains taxes.
So you're basically avoiding paying those taxes.
For the time being, you're deferring them.
Until later. It's a very powerful tool for real estate investors.
Absolutely.
All right, so we've covered maximizing that employment income, choosing the right business structure, tax-advantaged investments. Is there anything else?
Well, let's move on to an area that a lot of people overlook, but it's really important, especially as you start building wealth. Estate planning and wealth transfer.
Estate planning. That sounds like something I only need to worry about when I'm like a lot older, right?
Not necessarily. It's never too early to start thinking about how you want your assets to be distributed and how to minimize that tax burden on your heirs.
Okay.
The source talks about trusts
Oh, yeah.
as a really powerful tool for estate planning.
They always sound so complicated to me. Like, do I really need a trust?
Well, they can be incredibly valuable, especially as your estate grows. Think of a trust as like a legal entity that holds and manages assets for your beneficiaries.
Okay.
And there's different types of trusts out there, but the important thing is they can help you control how your assets are distributed and potentially reduce estate taxes.
So it's about making sure that my hard-earned wealth goes to the people that I care about,
That's right.
not just the government.
Exactly.
I like that.
And speaking of smart ways to transfer wealth, the source also mentions using annual gift tax exemptions.
Okay.
So you can actually give a certain amount of money each year to other people without having to pay gift taxes.
So I could start giving money to my kids now.
Yep.
And it would potentially reduce the size of my taxable estate later on.
It's like a double win.
It is a double win. I like that. Didn't we talk about charitable giving earlier?
We did.
Does that tie in here at all?
It does. Charitable donations, they can be a strategic part of your estate plan as well.
Wait, so being charitable can actually save you money on taxes.
It can?
Tell me more about this.
Well, by incorporating charitable giving into your estate plan, you might be able to reduce the size of your taxable estate and provide some tax benefits to your heirs as well.
Okay, so this whole estate planning conversation, it's really opening my eyes to this whole other dimension of tax efficiency.
Be glad to hear that.
It's not just about like saving money today, it's about building that legacy
Exactly.
for the future, for my family. Okay, this is good stuff.
The source really hammers home this point that getting professional guidance is crucial in this area because estate planning can get really complex.
Okay, I'm convinced. Estate planning is moving up on my to-do list.
Good. Good to hear. And as we kind of wrap up this section on wealth channels, let's touch on international tax strategies.
Oh, international taxes. That sounds even more complicated than everything else we've talked about.
It can be. It
Yeah.
can be. But the source gives a pretty good overview of some key concepts like offshore accounts, foreign earned income exclusion,
Okay.
and double taxation agreements.
All right. So if any of our listeners are dealing with international income or assets, it's probably a good idea to get some specialized advice.
Definitely.
Okay. International taxes, noted. All right, so, we've covered so much in this deep dive already. Retirement planning, business structures, investing, estate planning. It's a lot. Is there any hope for regular people like me to actually navigate this whole complex world of taxes?
There is, I promise. And that brings us to the next crucial element of tax efficiency, seeking professional help.
Okay, I'm listening. I need all the help I can get. Okay? I'm listening. I need all the help I can get.
It's smart to recognize that you don't have to be a tax expert yourself.
Right.
There are people who do this for a living,
True.
and they can save you a lot of headaches and probably a lot of money.
Okay, so who are these financial superheroes and how do they actually help us, regular people, figure out this whole tax maze?
Well, the source kind of breaks it down into a few key players.
Okay.
First, you've got certified public accountants, the CPAs.
CPAs, yeah.
These are your go-to people for all things tax planning and compliance.
Okay.
They can help you prepare your tax returns, make sure you're taking advantage of all the deductions and credits you're eligible for, and basically just keep you on a good side of the IRS.
CPAs, got it. Who else should we have on our tax team?
Well, then you've got tax attorneys.
Oh, okay.
They come in when things get a little more complicated, like if you're doing some serious estate planning or you've got a tricky business structure or any kind of unusual tax situation.
So CPAs for the day-to-day stuff and tax attorneys for the big picture strategic moves.
That's a good way to think about it.
Makes sense. Anyone else we should be talking to?
Well, don't forget about financial advisors.
Oh, yeah, financial advisors.
They can help you develop a holistic wealth preservation strategy that takes into account, your investment goals, your risk tolerance, and of course, tax efficiency.
Right.
A good financial advisor can kind of act like a quarterback. coordinating with your CPA and your tax attorney to make sure all your financial decisions are working together.
So it's like having a whole team of financial experts in your corner.
Exactly.
Okay, so we've got our team assembled. We're using those tax-efficient strategies. What else does this knowing and mastering source suggest?
Well, one of the things it emphasizes is staying informed.
Oh,
Tax laws, they're always changing. So what worked last year might not work this year.
ugh, that's a little overwhelming. So how do we keep up with all these changes without having to become tax experts ourselves?
Well, the source has a few recommendations.
Yep.
First, check those government tax websites.
Like the IRS website?
Exactly, the IRS website.
Yeah.
They usually have pretty up-to-date information on the current tax laws.
Okay.
Second, keep an eye on the financial news, major publications. They often report on big tax changes that could affect you.
Makes sense.
And then finally, don't be afraid to ask your tax professional.
Yeah, that's what they're there for, right?
Absolutely. They're your best resource to stay informed.
Okay, that sounds like a plan I can actually manage. Stay informed, get some expert help, use those tax-efficient strategies. I'm feeling pretty good about this.
That's the spirit. Remember, tax efficiency, it's not about avoiding taxes altogether.
Right.
It's about working within the system to minimize your tax burden and maximize your wealth over time.
I love it.
That's the goal.
This whole deep dive has been so insightful. We covered everything: retirement planning, business structures, investing, estate planning.
It's a lot.
It is. It is. I feel like I'm walking away with a whole new perspective on how to make my money work smarter, not harder.
You and me both. One of the biggest takeaways for me is just that it's never too early to start thinking about these tax-efficient strategies. Doesn't matter if you're just starting out in your career or you're a seasoned investor, there are always opportunities out there.
To be smarter.
To be smarter, yeah. Optimize your finances.
Keep more of that hard-earned money.
Absolutely.
And of course, huge thank you to the listener who sent in this incredible source, Knowing and Mastering Tax-Efficient Strategies.
Yeah, this was a good one.
It is packed with information that can really make a difference in our financial lives.
Couldn't have said it better myself.
So if you, dear listener, have a source that you'd love for us to deep dive into, please send it our way.
That's it for today's episode of Wealth Hustle 247. Be sure to follow, like, comment, and share with others. Keep pushing toward your goals, and we'll see you in the next episode.